Hi guys, I'm back again yet with another video. This is the final part. This is the last slide on the topic of fundamentals. As you can see, yeah guys, be sure to subscribe, comment down below, and yeah, but that's not it is important. But let's get to the video. So guys, the last part of it, how to trade fundamentals. One should be able to tie and logically understand the impact of news towards indices, currencies, understand that news do not determine market direction, right? I did explain on the previous video that if the market was to sell already technically, and then the fundamentals come in and perpetuate that movement into a sell or to the downward projection, then it was just going into the direction that the market was already intended to. However, if you structure wise, the market is looking to be bullish, and then the market comes for a short while and turns the market bearish, just know that it's only for that period of time. But the whole point is that the market is still going to go to the upside. So that is what I mean when I'm saying that fundamentals don't determine the market. I mean, don't determine the market direction. Yeah. So, for example, guys, another important factor is that even though you can read the news, understand them, understand how to apply them to your trading, right? But it's also important to just logically understand. Like, that's something that you cannot be taught. Of course, you can be taught something by anyone, but you also need to find that voice inside you to also make sense of things. I think that's something that a normal human being does have and born with. So you don't need to be a smart one to be able to understand that. And so, for example, if NFP report, so yeah, guys, if you are looking to trade NFP, so NFP, as I did explain, it's non-farm payrolls. It's a report on the labor market or industry in the US, how many jobs are created, how many jobs are lost. So, for example, to logically understand this, it would mean that if in the previous month there were not much jobs created but lost, that's obviously going to negatively affect the dollar, and then it's going to be weak, which means that you're going to buy currency pairs like Euro USD and your GBP USD and sell your USD Swiss francs and your USD CAD. So that is how you logically understand things and tie an event to the relevant currency, right? So a second point, a trader must decide whether they will trade the news during the news announcements or afterwards. Also, do not trade the fundamentals at all. So here's the thing, guys. Trading the news can make you or break you. In the same way that you can make a lot of money trading the news, you also stand the risk of losing a lot of money, right? At least there's something that is called a stop loss, which many of you, us, don't use or neglect using, but it could save you a lot of money during such times. But another thing, guys, that you need to put into your mind is that you do not have to trade the news. That is why I put the capital letters. Just because there's NFP and tomorrow there's gonna be news, it's also a decision not to trade the news. It's like when you're analyzing the market, deciding not to trade on a certain day, it's a decision. It's a good choice, right? So that's what I'm trying to say here. You do not have to trade the news. Like, all I'm trying to say is you can trade the news, right? Like normally as a trader, but if on that particular day there will be NFP report or interest rate, and then you just don't feel like comfortable trading the news, just don't step away, right? So that's what another thing that I wanted to highlight, that not trading fundamentals is also a decision, right? A good one. So make sure to use stop losses, take profits, Fibonacci, and relevant time frames by scalping the news on lower time frames and set realistic stop losses and TPs. So this thing, guys, this part forms part of risk management, which we will cover in the following videos, right? But do, guys, make sure to use stop losses, take profits, and your Fibonacci retracements. But I will make a video on the Fibonacci. I haven't been using like the Fib for quite a long time, right? It's never been a thing to me, but as you evolve with the market and the time, you start to also try to cut it down a few things, and also add a few parts, right? So for example, what I'm looking to do currently is at the end, the ultimate goal is to have a few instruments to focus on. Not five, not four, not six. At least maybe a three or four. Like, because it makes life easy and you don't get like be confused and because you're managing two different things. So like those are the tough decisions that guys at the end of the day we need to take in order for us to elevate and to grow. Because and I feel like there's a lot of peace when you have few pairs or few instruments that you're trading because you just wake up and focus on it, you learn about it, you notice how it reacts to news, you look at how it respects at what times and everything. So like that's something that I am envisioning, right? Or in the process of doing rather. So the last part is wait for candlestick closes, confirmations favorable to one's trading style, e.g. news trading is not compatible with swing style of trading the market as the news are only present for a short period of time. So I think I explained this on the previous slide, but like I said, guys, you need to know whether you're going to trade during the news announcement or afterwards, right? And also wait for candlestick closes, right? But the funny part is when they are news trading, like when there's the news involved in the market, you see those long candles. Maybe you're looking to sell and then you wait for the candlestick close and then you're already out of that trade or you missed out on it, right? So it's totally up to you guys how you want to trade the market because I always say to people that your charts only have to make sense to no one but you, right? And you must have an intention behind every technical tool that you put into your charts. There must be an intention behind you using it. You shouldn't just use your support and your resistance just because everybody is using it, right? So let me go to the charts, guys, to actually show you how you can trade news, right? Okay, guys, so let me show you on the actual charts, right? So look at the screenshots that are here. I can't remember well what were the news events that were involved here, whether it was the CPI or the FOMC, but I think it was the FOMC, right? Because the market opened with a bearish candle and then later opened and then later went to the downside, right? So if I can mark my areas, right? So if I can mark my areas, right? So this is how I went on about that day. So what happened here, I saw this level of some sort. So I saw this level of some sort. It was on the 15-minute time frame, right? So here I will be showing you how you can trade the news on the charts, right? Okay, sharp. So that day I had something like this, okay? So I realized that, okay, because indices are one of those instruments that respect the levels, which is trading from zone to zone or level to level, if you will, right? So the market was somewhere around about, yeah. And then from a technical perspective, I could see that, okay, if this is an impulse, then there might be another possibility of a correction, right? Such that when the news came on, they just went according to my analysis. But here's what happened. The market went and came back here, and then I closed here because I was reluctant and thought maybe the market was going to go back to the upside, right? Based off that fact that I usually say that there's market opening and then there's the actual movement. So I saw the sells, and then during the FOMC, I think the market went up, then later down, right? But I was no longer in front of the charts when it went down. Right. So all I'm trying to say is here, even in the midst of the fundamentals, but if you got your technicals right, then just let the fundamentals come in and do whatever that they're going to do. Let them prove you wrong if your analysis was wrong. But all I'm trying to say is you must be confident in your analysis and then allow the fundamentals to do whatever that they can do, which is they can go into a direction and then they can also not go into the direction. That is the nature of Forex, right? So another thing, guys, or way in which you could trade the fundamentals is by using buy stops and sell stops. So for example, let's say the market was approaching this level correctively, right? Maybe you were unsure whether to sell at the top, And if we can just erase this level, let's say the market was playing between the support and that level, and then you realize the market is approaching that level correctively, and then according to analysis, you say, okay, I think the market is going to go down, right? So then what you would do, you would put a sell stop here, because what the news does, they print these long candlesticks, meaning that if you are uncomfortable using the market execution, you could then use a sell stop in such cases, because then when the market, if it was indeed going to sell, it would trigger you into the trade and then go to the actual direction, or it was going to trigger you, then retest and then go to the downside. So that is how you could use a sell stop when there are news involved, right? And then alternatively, if at the same time the market was still there, but you still believe that the market is going to go to the upside. So if you're not sure what to do, and then there are news announcements that are on the way, you could put in a buy stop somewhere around about here if you believe that the market is going to go to the upside. And then because the news print these long candlesticks, then you would be triggered into that trade, then the retest and the actual movement. So this is how you could make use of sell stops and buy stops when you are trading with the news. Alternatively, you can decide not to trade the news. That is a good decision, because in Forex, doing nothing is also doing something, right? So I hope that makes sense. And then the second way that I propose is just looking at your technicals and just browsing through the news. If you still believe that the market is going to go into your direction, then just go into the technical and let the fundamentals do their own thingy, guys. Because I'm one who usually ignored the news, but there is something that is called confluence, guys, right? So what I've learned from these past news events is that at least just check up on what's going on, because it's nice when you have more confirmations as to why the market could possibly do whatever that you think is going to do, right? And then if it invalidates you, it's not something that you had control over, because remember, we focus on what we can control. What we can control is coming into the markets, doing our analysis, and letting the market does what it take its part, right? So you should not beat up yourself about, or when the market does not go into a direction, because there's still one line that I remember from the book, Mark Douglas's book, The Disciplined Trader, that we make trading hard and painful ourselves, because how can you blame yourself or feel in a negative way when the market takes something away from you, whereas it is its nature that it does whatever that it can do, meaning that it can go into a direction and then it can also not go into a direction. So once you understand that, then you don't, it's not to say don't review your losses, because sometimes you lose because of human error, which is your mistakes, but let the market to play its part. You did your best, you analyzed and saw what you saw, and you were actually planning and trading what you saw. So if the market invalidates you, it was not necessarily your fault, but it just did whatever that it was intended to do and went against you. So yeah, guys, I've come to the end of the video, so I hope you watched up until the end. I will definitely see you on the next video.